What's up, everybody? Welcome to another edition of Dave's Daily Dives, where I take a look at some of the key technical levels on the broad macro indexes, but then I go ahead and do a deep dive into 5 Zacks Rank #1 strong buy stocks that are breaking out through new 52-week highs. So that way you get the good old time-tested returns of the Zacks Rank. But the more important part means that EPS estimates are being revised to the upside. So that could be confirming the reason why these stocks are breaking out through to new highs. So you don't want to miss those 5 stocks at the end of today. But to start today, I'm still on this fib from the May lows to these early June highs. And this move we had there, followed by a retracement to the 50-day moving average. I think that was just too tempting, that the 50-day was just too tempting for the market to not hit. And then now this extension higher. I think at the very least the extension gets to the 38.2, which sits at 24.92. And of course you have that psychological resistance level up at, well, 2,500 rather, on the S&P 500. That's my smiley S&P 500 face. So that, I think, is a short-term target here on the S&P 500. Doesn't look like the market has any real areas of resistance ahead of that. So from a technical perspective, it does look like smooth sailing. Now, the Nasdaq, really been a very interesting story here, as we can do the same thing on this May move to June highs, and then remember the tech wreck, terrible day. Stocks came down ultimately all the way down to a 76% retracement of this move. Now they've come higher. The difference here in the picture for the Nasdaq, you started to have these sort of lower highs get put in, this downward trend channel, and then you got a gap up and we're off to the races. So I don't think that the Nasdaq, even if it comes back, going to have a tough time getting below the 6,300 level, the 6,337-ish range, right? And then here on an extension, you got the 38.2. It's up at 64.67 for the Nasdaq. So another 55 handles away from where we closed today. And then, of course, psychological 6,500 resistance. But I think that 64.67 is going to be that first level. Also important to note, here is the 50-day coming in, and how the Nasdaq spent a few days below that 50-day, but then now it's found another leg higher. So good news for the bulls when it comes to the Nasdaq composite there. And they've been boosted by some decent earnings, but last night Google, there was a little bit of a worry about Google after the earnings. And so this morning they retraced a little bit, ended up finishing the day at 969. Now, heading into the number last night, the market was expecting, I think it was like basically a $50 move, maybe a little less than $50. I think it was a $40 move, a 4% move out of Google. Didn't quite get that, so it actually moved less than what the options market was predicting. And also, if you note, it's right on this 50-day moving average. So that's what you got out of Google. And given that you had the Nasdaq hanging in there with a big component like Google here, being a little negative, that is definitely a benefit. Historically low volatility is what we're talking about here in terms of the VIX. I mean, it's almost comical now. The VIX 943, we nearly got under 9 intraday today. Now remember, the VIX is a measure of the variance of S&P 500 options, S&P 500 index options. So I think that what you're seeing here, obviously, this is the market telling you they don't expect that much of a crazy move out of the S&P 500, or at least the index options are priced as such where the market's not really expecting these huge moves out of that. Okay, so a lot of people like to call this the fear index. It's more of the uncertainty, right? The uncertainty of where they think the market's going to go. Either way, right now there is virtually no uncertainty here. Should we say that 17 is the new 30 when it comes to the VIX? Either way, really has come under pressure here, very, very low. Now, we have talked about currency pairs in the past, and I do just want to touch briefly on what's been happening with this dollar yen trade. Similar thing like I was saying, where you got this downward trend, but we've bucked the trend, gone above that, trickled down along the trend line, ran out of gas at a key fib, and now it's coming back down. So obviously this 109 level is a level to eye on the dollar yen. If you notice, there was quite a bit of flirtation with the 110. So you may have one of these situations where this is a much harder bottom, but this would be a softer bottom, and we'll have to take a look and see what happens. Why am I talking about dollar yen? Just kind of global risk on, risk off sort of stuff. But the real interesting story for me has been the euro against the dollar, because what we've seen is huge move in the euro, especially since April. We're all the way up to 116 right now against the dollar, when before, heading into the year, we were talking about parity with the euro down at 103. Now we're all the way up at 116, so a pretty dramatic move there. Okay, let's talk about some stocks. And here, this first one I'm going to talk about, unless you've been living under a rock for the last few weeks, you have to know AAOI, Applied Optoelectronics, so about the fiber optic networking products. And this thing is pretty much gone exponential. Out at 60 bucks, sort of bounced around, flirted with the 50-day, and then just has skyrocketed up since then, broken through all levels of previous resistance. The stock just does not care. Okay, huge accumulation. Now remember, this is a Zacks Rank #1 strong buy, and if you looked at the price consensus and EPS surprise chart, you would probably be surprised to see the huge move in EPS that has helped to justify this move higher. Stock's already at 96.80. You gotta believe that the $100 level is going to provide some resistance. We have the commodity channel index is well overbought, got all the way up to 200, down to 102. Now again, I think I want to play this continuation move. Should this get down to the zero line and the stock continue higher, that'd be a nice little continuation that you could play there on shares of Applied Optoelectronics, AAOI. Then you've got Brinks. So this is, you know, the Brinks truck. You've seen them before. If you want to drive your own Brinks truck, maybe you should think about these guys. Look at the move since February. Very nice from the low mid 40s, really, all the way up over $70 right now. The 50-day moving average has provided plenty of support along the way. You do have this one sort of intraday dip for that little guy. I wouldn't worry about that little guy. Another dip here into May when the market sold off, but it's been a nice, slow and steady bottom left to top right movement here. And again, this is a Zacks Rank #1, a strong buy, so that's likely confirmed in those EPS numbers as well. You may have heard about this small online social media company by the name of Facebook. And Facebook has surprised a lot of people here by pushing up through these previous resistance levels, and now all the way up at 165. One thing I do lean on a little bit is this Shiken money flow. Essentially, values over zero, you see that's buying pressure. And there's been buying pressure, I mean, save for a little dip there, going back pretty much all year. You've seen steady accumulation in buying in shares of Facebook. Now you've got a Zacks Rank #1 strong buy behind it. Again, that means that analysts out there, not us, but other analysts have been increasing their earnings estimates on shares of Facebook. So that's why you're seeing this march higher. Big time move out of Facebook. It looks pretty good. Obviously, we've got some event risk here coming up, but definitely something to keep an eye on moving forward. Of course, Facebook ticker FB. Now I'm going to go off the beaten path a little bit to give you Healthcare Services Group, HCSG. And this is a stock that tends to jump and then consolidate. Jump and then consolidate. Now, over the last few months, there's been a whole lot more jumping than there's been consolidation. Now, you have this one really broad day here, and you could argue that this was kind of an extended consolidation within this $5 sort of range. Of course, you got a sort of top tick trying to get above 50, failed. Then you get a gap up on earnings, and now it's off to the stratosphere. So I like this. So if anybody's not long this yet, you can add a position and just keep your stop loss under this $50 mark. Give you a nice little risk versus reward here because it could potentially keep on going to the upside, but you've carved yourself out a nice little stop loss here under $50, which should be supported based on the breakout and this huge bar here. So you should get some support from there. And then again here we get the pullback, stalls out, and the buyers come back in, and that was just around $51. So some very decent price action here on Healthcare Services Group, ticker HCSG. Now, the last one I got for you is LPL Financial. So this is brokerage and investment advisory services. A lot of the independent guys go with LPL, and this is more of a slow and steady kind of situation here, where you've had these consolidations where the stock is kind of broken up above this range, wanted to stay there, ran out of gas, and now essentially just has a larger range, right? So from 44 on down to 38. But recently there's this new bullish trend channel that has emerged, providing plenty of support for the stock. And you'll see the last time basically in June, the end of June, stock came down to touch that 50-day moving average and has been rallying ever since. So you got a couple of options here. You could play the breakout from $44, keeping a stop down here, or you can wait on a pullback to that level or even down to the 50-day moving average to go ahead and participate. And that's LPL Financial, ticker LPLA. All right, folks, so thanks so much for hanging out with me here on Dave's Daily Dives. If you want to stay on top of all of my shenanigans, be sure to check me out at Bartosiastics. That's on Twitter and StockTwits, BARTOSIASTICS. And as always, I'm here with Zacks, running Momentum Trader and Home Run Investor. So thanks for hanging out with me here today on Dave's Daily Dive. I will see you all later in the week. Have a good one.